Welcome to Markets Now. I'm Michelle Rourke with Bryan Doherty of Total Farm Marketing. A mixed close in both corn and livestock futures trade here today. And Brian, let's start off talking about the corn market first of all, because we look like we ran up into some chart resistance, but did we see profit taking or farmers selling as a result?
We think you saw both. So if you're long this market and you've been selling rallies, it's paid really good dividends. So when I say long, if you're a speculator or just someone who bought and want to take some money out of the market, right up to a major resistance point, 200-day moving average, upper end of the Bollinger Band, and then today a down day. The backdrop, though, to that downside is really, I think, just big levels of farmer selling. You've had very strong uh, cash sales over the last 48 hours. We've talked to numerous farmers that have just said, I don't want this one to slip away. We saw these same pricing opportunities in October when March corn futures reached 452, and that was early October. By mid-October, it's 422. Gave up 30 cents really quick. So I think it's just paramount when you got big supply year and no weather developments in the southern hemisphere that farmers to expect that farmers will continue to dish some corn out. Memories are short. Last year, holding inventory into the end of the year and into January did not pay dividends.
What about the soybean market? We did close fractionally higher, and I don't know if there's been some corn soybean spread unwinding, but the soybean market has really held up quite well here in light of a record South American crop. And is that because we have good demand or because it's too early to put that crop in the bin?
Well, we're still seeing good export sales. So let's start with that. So today's figure was 43 million bushels. So it's confirming that we're seeing sales. And we had an announced sale today this morning. It's rather large. I think it was 300,000 tons in that area. So we're seeing the market respond to lower value. What the marketplace and our concern is that as we continue down this path with good weather in South America, you're going to continue to see those crop estimates continue to creep upward, maybe toward the private estimates of 170, 172 million metric tons. The USDA is 169. Some of the private estimates, Conab, I think they raised to 167 now. So you've got some creep up on the expectation for good crops. However, the key here is about mid-December is when the weather markets really, I think, grab hold and take hold. So I don't have anything in the forecast, or I don't see anything in the forecast right now that would suggest a sense of urgency for end users to cover. But we're at that time of the year where that can happen quickly. The big concern, everybody's uncertainty at this $10 level, which the market continues to kind of trade around, is whether or not we can sustain this and get a rally. I don't think you get a rally without weather. Palm oil has been a good place to see where there's good demand for world vegetable oil. But Michelle, on the big picture, if that southern hemisphere crop continues to come through, there's that. And then there's concern that while export sales have been good, is there room for cancellations? What does January 2nd bring? So there's just a lot of uncertainty to probably cap prices for right now. If I'm a producer, I'm either selling some beans or I'm getting some put options bought for the next 60 days.
Yeah. If we would happen to get January back above $10, would we get much of a rally beyond that, Brian?
I think it has to be weather related. I just don't see a
Okay.
scenario where all of a sudden the beans become the sweetheart. Now, the good news is, and we all know this, that that view in beans can change practically overnight. And when and if it does, Katie bar the door, how quick things might move from a weather perspective, because we can take carry out, cut it in half really fast, where you just don't do that in the corn market. So that might be something to come. Probably again, maybe reason to lean more toward the puts, which put a floor in, leave the top side open because we are entering that weather event. But without weather, it's just really tough to make that argument because I always look at what's called ending stocks and then stocks to usage, and that's kind of the numbers that come out of if you put supply numbers in a funnel and demand that comes out the bottom, and it basically is the pile getting bigger or smaller, right? And it got a little smaller with a yield reduction, but it's still a big pile. And now from this point, is the world pile going to get any bigger or smaller? Right now, with the weather in South America, the bet is that the world pile is going to get a little bigger, therefore less need to buy U.S. beans down the road, and some concerns with cancellations.
Yeah, that is something that we have to watch is those cancellations after the first of the year by China and others. Okay, so the wheat market, did we just follow corn lower today? Is that why we were seeing pressure?
I think two things happen. One, when corn's down, wheat can't hold up without some supportive news for wheat. And we just didn't see any news in the wheat market today. Export sales were, I'm going to say, kind of not that great at 10.7 million metric tons. They're okay for the year, but we're just not seeing anything new. I was a little disappointed. I thought maybe we'd get a little more just, let's call it support on this cold weather that has pushed through the Midwest. There's no snow cover, and we're talking at my home, one below in Wisconsin, pretty stout winds. So not necessarily the best conditions for winter wheat, but I would just say it's in a consolidation pattern, double bottom on the long-term charts, good value to the world. U.S. is not necessarily the first place that the world goes to for wheat, but as a world pot of wheat, let's call it pot of wheat, there's limited supplies of exportable wheats and they're good and it's good value. So I'm not a bear on wheat right now. We can get to being bearish down the road if conditions remain good, but I like the long-term double bottom. We broke the downward channel line. Just a soft day today is the way I'm going to look at it.
Yeah, let's hope that double bottom holds. So the cattle market, we made new highs for the move in live cattle futures on $1 to $3, higher cash trade. Boxes were on fire at noon, yet we ended lower. Sometimes markets top when the news is the best. Is this just a reversal or a top? What do you
Yeah,
think?
so I think you got a kind of a battle going on here because the last time that we saw prices up in this window, or many of the last times up in this prices, unless the cutouts really lead the charge and hold, what ends up happening, the market just prices itself out, and for whatever reason, whether it's some last minute demand shopping, what have you, we've seen this market push up. But today's reversal, which means the market went into new highs today and finished lower, they didn't take out yesterday's low. That would be a bearish key reversal. This is called a hook reversal. But that could be a telling sign that, look, we've kind of factored in all the news. And the next thing you might hear is just how Packers are not making money. And that's been the cry each time we've gotten above this 190 area, that there just aren't any profits in there. So we'll see. Things can change, but supply side, I still argue that from a long-term perspective, Michelle, it'll be tough to see where we're building the herd to really, drop this market over and get back into the 150 range. On the other hand, I just again worry same thing we talked or have been talking about. It's just the consumer can absorb these higher prices. Um, Boy, time of year that we are spending a lot of money on a lot of other things. I just have my doubts.
And a big up move in the milk and product markets here on Thursday. I think January class 3 fluid prices up 65 cents, just above the $20 mark. What drove that?
Well, when you hit some spots on charts, first of all, you may have had some short covering. So people put on sales here up against a lot of moving averages, and the market managed to get through that. The backdrop, there was a good jump in cheese prices again today. And what the belief is really just cheese has gotten down to a level that it's a bargain. It's a really good place to be, and it looks like the jump in cheese, along with whey prices reaching their highest level since 2022, left the market pretty valuable at a low level to buy. So look to me like short cover buying, some technical buying, some good push in the market. Yet we've got to see that demand sustain itself. The last time we got into the 20s, it wasn't too long lived, and cheese prices still aren't high enough to sustain $20 milk. And in fact, milk should probably be closer to about 18 and a half. So we need to see the cheese follow through and continue to show those signs of life. Today, I think was just a combination of short covering and good demand, good signs in the cheese complex.
So when you look at the charts on milk prices, it looks like maybe we put a low in the early part of December, but how much upside really is there? You don't sound very optimistic about it.
Well, I think it needs to prove itself. So the last time we saw this big surge or push in milk prices, we had the backdrop of bird flu. And from everything that we're looking at, kind of come up with, the bird flu hasn't had the impact on milk reduction that maybe the market feared. And and so to get milk prices to hold and sustain themselves, we'll have to see. But I was pretty impressed today. February crossed over the $20 mark. The contract high came in October at 2032. Today's close at 2006. Some really impressive push higher. after here just a couple of weeks ago trading down to about 18.5. So really good surge there. The question is what's going to surge it further? Can demand sustain this and hold this?
Okay, sometimes the technicals lead, so we'll see. Thanks so much, Bryan Doherty with Total Farm Marketing, and that is Markets Now.